Welcome to another interesting edition of the Economy and Politics Show, where we discuss key developments in the economy as it affects the household. Today, we'll be discussing Nigeria and the pathway to sustained economic growth. And with me to have this conversation is Dr. Ayo Teriba, a well-respected economist in the nation. Welcome to the program, sir.
Well, thank you very much, Otto.
Before we begin, let us take a look at some of the key economic updates from last week. The October 2021 Nigeria inflation rate released by the National Bureau of Statistics showed that the nation's core inflation rate increased by 15.99% year-on-year, while the food inflation index rose by 18.34%. Also last week, Nigeria's third quarter gross domestic report released by the National Bureau of Statistics showed that the economy grew by 4.0%. According to the NBS, it showed a sustained positive growth over the last 4 quarters since the recession witnessed in 2020. Real GDP grew at 11.07% in third quarter 2021 compared to second quarter 2021, reflecting a higher economic activity than the preceding quarter. We take a breather, and when we return, we'll continue this conversation.
Tune in to Web TV Daily to stay up to date and informed on the financial market, personal finance, and more. We have got you covered with all your favorite TV shows, economy and politics, market review, women's series, millennial talk, Islamic Finance Weekly, The Brief, exclusive interviews, events, and we keep you up to date on all the updates in the financial market with the market opening gong. Watch premium content. Watch Web TV. Same news, different perspective.
Welcome back, and if you're joining us, it's the Economy and Politics Show, and my guest today is Dr. Ayo Teriba, an economist, and we'll be discussing around Nigeria and the pathway to the sustained economic growth. So, Dr. Teriba, let's begin with something that you've been discussing and bringing to the fore, and people were trying to understand it, but now it's become a reality to Nigeria, and that is the need for the country to leverage its assets as a way out of high debt costs. Recently, you wrote an article which was well read across the country around it. So I'll put this question again to you now. How can Nigeria leverage its assets as a way out of the high debt costs, not just at the federal level, but subnational?
Okay, thank you very much. I'm glad that the message that it is not just about what countries owe, it is also about what they own, national economic policy. And that's a most welcome development. This is spearheaded by the presidency. And I'm aware that the president has, given approval to the National Council, on privatization. And the National Council, led by the Vice President, has established an inter-ministerial committee to compile a computerized national asset register. It's going to move us away from the dark age in which the economic discourse revolved about revenue and debt. Revenue, deficit, debt. With no mention whatsoever of assets. To a new dawn in which all of those issues will be discussed with reference to assets. Revenue will be discussed primarily with reference to national assets. So I would like to correct the impression that you created, trying to narrow down the building of national assets to debt management. Debt management is the least of our concern in turning to, national assets to make sure that, one, we know what the country owns. Right now, we don't know. Nobody knows. Neither we as defined by any Nigerian. No Nigerian can beat his chest and say, I know what Nigeria owns. We don't. So we'll get to know them because they will be listed as much as possible in a national asset register. You begin to, a journey of 1,000 miles begins with a step. You won't get perfection in one day. Even if it is one asset, if it is 10 assets, you have started the journey. So by the time you get to 100, you get 1,000, then you begin to count thousands. So every day, more MDAs will be, pulling their assets on the registry. So the next step will be that once you know the assets, you can establish their values. The difference, all assets that any country or company or state owns can be categorized into two broad categories. Non-financial assets, which are assets whose market values are not known. That's what makes them non-financial. And financial assets. Any asset whose market value is known is a financial asset. Because the only way you establish market value is the presence of third-party claims. So the market value of your debt is not in doubt because they all arise from third-party claims. But the market value of your asset could be in doubt. And a situation in which all of your assets, more or less, are non-financial, whether corporate or physical or intangible, or for that matter, human capital. You can establish the value, market value of your human capital. That's what's driving, Philippines, training doctors, sailors, nurses, and domestic workers. The fee or the wage of domestic workers internationally are known. The wages of doctors are known. So it becomes a simple game of you trying to increase your pool of such skills, and they are human assets, they are human capital, but they're financial. Because you can say that, you can pursue a strategy, let me double the number of doctors among my nationals, and then you double the income that could accrue to them by helping them to penetrate the diaspora corridors, the migration corridors. So it's a welcome development that once you know your assets, all discussions about debt sustainability is meaningless relating it to GDP. For the simple reason that GDP, like revenue, is a flow, but debt is a stock. So you cannot be judging the sustainability of a stock by relating it to a flow. So you need a corresponding stock to determine the sustainability of your debt. And assets are stocks. So if you know your assets, if you establish their value, debt sustainability comes down simply to what's your net worth, what's your financial net worth. So if the financial value of your assets exceeds the financial value of your debt is sustainable. Full stop. It doesn't matter whether it's 500% of GDP. As long as you own more than you owe, you are solvent. And you'll be liquid. Illiquidity comes from your assets not being financial, because any financial asset, if you are in the tight liquidity corner, the market values are known. You can securitize them. to raise liquidity. But securitization is a small component of it. Securitization, particularly debt securitization. So it's going to solve our debt problem, because once you have assets in view, Saudi is securitizing Aramco, raising sukuk on it, interest-free debt. They borrowed like 50 billion. Country borrows, Aramco itself borrows. Okay? So securitization is the least of the benefit. Debt sustainability is the least of the benefit that you can get from assets. Yeah. You can get revenue from assets. As a matter of fact, all revenue that you have are like streams. Your assets are the spring from where these streams flow. Okay, so your revenue, your GDP is a flow. Yeah. And it flows, the spring of your GDP is your assets. So being preoccupied with revenue, being preoccupied with income is misguided. One is the master, the other is the servant. So any flow is a servant to the stock that yielded it. So your GDP is the extent to which you can exploit your national assets in 1 year. Yeah. Your sales revenue or your government revenue is the extent to which you can generate revenue from your national asset or your corporate asset in 1 year. So you can solve all your revenue problems by turning to assets, either securitizing them or liberalizing them. Because most of these assets that we're talking about are government owned, particularly in the infrastructure space. Yeah. Or commercializing them, especially when you're talking of real estate, your land, your buildings, leasing them, to earn income where they had been idle in the past. You don't even know their value. So once you establish value of the land, once you establish value of the building, it becomes attractive for you to say, if it's this valuable, how much am I earning? I'm not earning anything. Then you try to earn something. So it solves your revenue problem. And it also solves a very important problem, perhaps the most important problem, that is more important than debt or revenue, that you can attract equity investment into assets whose values are established. So our balance sheet has been largely neglected, because the queen on the balance sheet is the assets. Yeah. And the next important component on your balance sheet is the equity that you're able to attract.
Because of your assets.
And when that comes from abroad, that's what they call FDI. So once your assets are inside, you unlock revenue, you get debt sustainability, and you attract equity. So it's not just, the only kind of liability that Nigeria raises now is debt, which you will one day repay, which you will service. But when you can attract equity, why contract debt? You never repay equity, you don't service equity. Are we together? And attracting equity is as good as selling investment opportunities in your assets, like we did when we, offered 50% stake in LNG for sale. Investors bought it. So you, the recipient, is the seller. The investors, who brought the money, are the buyers. So we did the same in the GSM telephony when we liberalized it. Money came to saturation. There are more assets. You don't need to borrow money from China to develop your rail. You don't need to borrow to develop your national transmission grid or your pipelines or your city centers. Once their values are established, you begin to attract investment. And investment has the benefit, just like securitized debt, of unlocking future income. So investment is going to come into an idle asset just like LNG investment, unlock new stream of revenue for us. It attracted investment, it eased our foreign exchange constraints, and it unlocked the new stream of revenue, new stream of employment, new growth for us. So basically, we should commend the federal government and hope that the journey that they've started will rapidly come to fruition, and that states will emulate the federal government, and that local governments will also similarly emulate the federal government.
Okay, Doctor.
That's the way out of the crisis that we have found ourselves in since oil prices began to weaken in 2014, ahead of the 2015 election, and then in 2016, in the face of the recession and the rounds of devaluation that we had, because we didn't bring assets into the equation, that the crisis, had caught up with us. Now that we're bringing assets into the equation, you can expect, that assets will help you to rejuvenate every component of your balance sheet, be it debt or equity, every component of your income statement.
So, Doctor, you've really said it clearly. Assets, and they're very key in addressing issues of revenue and also sustainability for economy.
Employment.
Yes. Now, the Bureau of Public Enterprise seem to be towing the line. You've been talking about the need for liberalizing, privatizing state assets. Since inception in 1999, they've had over 200 plus deals and raised over 1 trillion naira. But in terms of critical steps to connect our assets to global liquidity, in the next 1 minute, what would you advise the BP? They really told this line of what you've been saying, the need to really understand that we need to connect the assets to liquidity and also improve our balance sheet.
Well, we started by saying that the president has approved that asset register be created, a computerized asset register be created, and that the National Council of Privatization, chaired by the Vice President, has set up an inter-ministerial committee. And I saw online that an expression of interest has been issued calling for IT consultants, who can come and provide technical input into the creation of the computerized asset register. Okay, so they've gone for the jugular of the issue. It's about assets. Know what you own. Value it. So it's the first step. You create the registry, you value them, and once you know, so I own so much, and I've been putting myself under unnecessary stress, by people comparing my debt to my GDP, or comparing my debt to my revenue, or my, debt cost to revenue. I can now turn to assets and raise interest-free debt. Yeah. I can issue investment-grade debt or issue equity. The difference between securitized debt or securitized equity is that one has a maturity date, the other doesn't have a maturity date. And often they are convertible. Yeah. So once assets come into equation, you can reduce debt cost in the federal government to zero, because paying interest will no longer be a fiscal issue. It's a financial issue. I put an asset down, go and milk that asset for your principal and for your profit. Yeah. While the money you've given me, there is no leakage, there is no tail coming to whack the dog. In terms of there's no debt cost. I just get revenue and I go and solve the problems that I worry about, particularly socioeconomic pressures. Because it's not even infrastructure, because infrastructures ideally should be packaged as assets that you attract investment to. So you don't have to borrow to fund infrastructure. Infrastructure can fund itself of any type. Okay, you only have to know how to package it into deals that will be attractive to investors. So you can then do more on security, you can do more on health, you can do more on education, you can do more on raising your human capital. People say that a large population can either be an asset or a liability. Yeah. So if you attract investment into infrastructure, the revenue that you unlock from asset securitization or asset liberalization or asset privatization, you can concentrate it, on safety of Nigerians and enhancing the skills of Nigerians so they earn superior income from abroad.
I think that's
and reverse the situation in which most of the value added in most of the sectors of the economy, including agriculture, including oil, are foreign value added. Because the core skills, come from abroad. They're Indians or Chinese or Europeans or Americans. Now, if you invest in your own populace, they will displace those foreign skills at home, and they will also take the battle to them in their own countries, in the diaspora, once your country has enough money to invest in them.
So we have to be just strategic about it, and that's very clear.
Yes.
Thank you very much, Dr. Teriba, for that. As we wrap up this week, we have the Economy Associates 2021 fourth quarter Nigeria Economic Outlook one-day conference. If you guys give us a hint in the next 1 minute of what we should expect, because it's been a very eventful year. Economic reports, like we just talked about, the current growth rate of 4.0%. Inflation seems to be decelerating. We've, through your past sessions, made that call for us to leverage the opportunities we have to our assets to address liquidity issues and achieve stability. So what would we expect?
Okay, right. I mean, our Economic Outlook conference, well, the primary focus of our conferences is to get up to date with the latest global economic trends. The global ecosystem is evolving at a very fast pace. And there is a challenge of deciphering the latest trends. So you need to identify the shifts in trends. You need to identify the trend shifters. You need to be able to interpret what the trend shifts means for the future of your country, the future of your state, the future of your business, your personal economic future. So we start from, hey, here are the latest trends. Here are the emergent issues on the global scene. And we hold these conferences every quarter, and it will surprise you how much of new information accrues from the global space within a space of 3 months, or even spaces of 2 months. So that's the punchline. So everybody have, that opportunity to update, to get on the same page as far as what the global opportunities and threats are. And then we now take in turn what the country needs to do to align, what the states need to do to align, and what sectors and companies, and even individuals, need to do to align. In a nutshell, that's what EA Quarterly Economic Outlook conferences are about.
Thank you very much, Dr. Ayo Teriba, seasoned Nigerian economist and CEO Economy Associates. It's very clear that if Nigeria can know its value of its assets, it's the first step in terms of having a hatchery, computerized assets, and know the valuation. We can begin to address issues of our debt, like you rightly said, revenue, achieve liquidity, and begin to intervene in key sectors that can unlock economic opportunities for the country. Thank you very much, Dr. Teriba, for the time.
Thank you, Arthur. And thank you very much, viewers.
That'll be all for this edition of the Economy and Politics Show. And if you want to learn more around how Nigeria can achieve a sustained economic growth, you can log on to our website, www.prochange.com, to read all our latest articles, particularly ones also from our guest, Dr. Ayo Teriba. They're all captured on our website. Just log on to it, www.prochange.com. Also, if you want to Follow us on our social media angles. They are there for you to follow us. Platforms are displayed on the screen. And in this period, we also implore you, if you want to send a question, comments, or observation around our conversation today, send it to otobasi.abasekun@prosharing.com displayed on the screen. Thank you for being part of the show. Looking forward to that interesting conversation. To come your way again, thank you for watching and have a nice day.